As a quick recap, I'm Michael Manatskanian. I've bought over $25 million of real estate and became financially free before 30 years old, all thanks to real estate investing. I'm not going to just pretend like it was just rental properties itself was the thing. It took a lot of personal finance. It took a lot of, I'd never made over six figures as I was building my portfolio. And the big thing there was just like savings, right? Like you can make a bunch of money and it's meaningless if you don't save any of it. And you can make less money. If you save it, you're in a better position. And then when it's time to invest, you choose how you're going to do it. And for me, started the stock market route, but it was really real estate investing that made the most mathematical sense to be able to achieve my goals way more quickly. And then doing what I call super investing, which is not just investing using your own money, but doing so with a lot more leverage in place, raising capital, creative finance, co-living, right? So creative finance allows you to buy better deals with lower interest rates and lower down payments, meaning you get, more scalability and just better deals. Co-living allows me to take the same exact property that would make maybe $100 a month and allow it to make me thousands of dollars a month for one single property. And the capital raising eliminates the biggest bottleneck, which is for most people, you'll need, if you want to buy 10 properties, you'll probably need $1 million or more dollars. Well, most people can't earn and save that much money. And I definitely couldn't while I was active duty military. So capital raising allowed me to scale much more quickly and effectively and build a portfolio that made the most sense for me. So with all that being said, if you guys need any help with anything, I'm here to answer all of your questions. I do have a few questions that were already submitted to me, both focused on basically my investment strategy as well as my favorite way to do co-living. This is very timely considering, there's a variety of ways to do co-living. And during our live weekly office hours last week, our guest was in a situation where he was deep into a BRRRR deal, buy it with a hard money loan or private money, you renovate it, and then you rent it out and you refinance it to pull all your money back out. That sounds great in theory, and that's why people educate and sell a bunch of courses around it. But the reality of it is it's not that easy and there's a lot of risk involved. With that being said, it's very timely that the question that was asked was, okay, if I don't like BRRRR, and I do BRRRR sometimes, it has got to make a lot of sense for me to do so. And I'm probably more experienced than a lot of you guys doing BRRRR. So, I'll explain why I do and don't like that. It's a good strategy, but it also has a lot of risk. So I'll explain why I do my favorite investing strategy and why I recommend the vast majority of you to do the same thing, especially if you're doing your first, 2, 3, 4, 5 deals or your first out-of-state deal. So you can maximize your returns, maximize your speed to cash flow, and minimize your risk, because that's so huge when you're starting out. You want to minimize risks that can derail your entire path. And especially if you're raising capital, it's just as important to make sure, it's even more important to make sure you're not putting other people's money at risk by doing something that you may not be prepared for at that moment. And then we'll talk about co-living, right? So co-living and investment strategy. So to get started, the first question was, what is my favorite co-living investment strategy? That's a great question. For those of you who are looking to buy and hold real estate, I have an entire community called the Co-Living Freedom Community. And you can come in, it's a monthly subscription. You cancel anytime, you get all the tools, resources, all that good stuff. If it's not the right fit, keep it all. But the idea there is I literally lay this out step by step for you. So instead of trying to reinvent the wheel and just freestyle talking about it, I'm going to go pull up some of those resources right now and share that. That's a perfect way to educate on it because this thing is laid out. I'm an engineer by trade. So step-by-step process, like sequential, right? Laying it all out is very important to me. And that's how my education is taught. That's how I teach this kind of stuff because it's the easiest way for me to, the way I like to learn and the way I like to understand it. And I think a lot of other people feel like that is missing. They get little pieces of information here and there, but no one's putting it well into a straight organized fashion that is like learn, do, learn, do, learn, do. So let's go into that right now and I'll show you. So if you're not already in my free real estate freedom roadmap community, you are missing out. Definitely hop in. It's absolutely free. There's tons of free trainings in there and laying out financial freedom, what the overall journey looks like, some personal finance stuff, understanding real estate investing as a whole, plus deal analysis. We got free tools in there like calculators and all that stuff, bird dogging, co-living beginner's guide, and the paid monthly co-living freedom community is right here. So for most of you, it'll look like this, and then you got to unlock it, right? So what we're going to do is we're going to go to a training in here for you guys. So basically, it's going to be under co-living strategy deep dive as part of it. This is actually pretty much where it's going to be. But instead of going through a video, I'm just going to go to the slides that I already have for that question, basically. So the core strategies to owning co-living, right? I think There are 4 core ways that you can own co-living properties. The 4 ways, quite literally, you can either buy a property. This is my favorite strategy. I'm telling you right now. My favorite strategy is to buy a property that is ready for a new long-term tenant or whatever. And I'm buying a property that's already in great condition. And then I convert it to co-living, for example, by taking offices, living rooms, all that kind of stuff, and converting them to additional bedrooms. Sometimes we'll convert garages. Basically, what we're doing is we're taking a 5-bed, 3-bath house that's 2,500 square feet, and we're taking that extra dining room. It's got a bonus living room, it's got an office, all these things, and we're converting them into additional bedrooms to get it to be 7 to 10 bedrooms. That I prefer this because you have the least amount of renovation costs, which means you also have the least amount of risk. If you are only adding a couple non-load bearing walls to build bedrooms, it's going to cost you $3,000 to $6,000 per room. So even if you're off by a little bit, it's not going to be a substantial issue. And this allows me to buy lots of properties that are creatively financed. So this is kind of a big part of my overall investing strategy, is combining the way I like to renovate and convert to co-living to the way that I could find the best deals to do that. So if you're looking for something that is advantageous for creative financing and requires the least amount of money into the deal, it's the turnkey property, just a standard house. You go on Zillow right now. I could literally show you how to do it in like 5 seconds and convert that into co-living. All right. And we're going to go, we can do Dallas. That's fine. Dallas, Texas. This is also laid out in much clearer detail in the co-living community. But literally all I'm doing, saying 4-bed, 2-bath, give me at least 2,000 square feet. There's a ton of them. Let's say we don't want it to be above 500,000, and you don't want super cheap, properties that need a lot of renovations. And there are 163 results here, right? And then you can research which zip codes make the most sense for you or whatever. But basically, I'm just looking for properties. Honestly, I prefer 3 bedrooms if possible. Let's see how many of those there are. All right, there's 91 results for 4-bedroom, 3-bath. So I'm looking for something, let's just say this one, because you got to review the floor plan, you got to do all those things. I'm not going to go into the weeds of that. I'm going to just show you what am I talking about. So I'm looking for a property just like this. Like this one, I say turnkey, like someone is selling it on the market or trying to sell it on the market. It's nice condition. I don't have to go and demolish the house entirely, which is going to take more time, cost me more money. I don't want to do those full renovations. I don't want to do those. And if I do, I buy those properties cash, and there's got to be a lot of equity. It's got to be a huge discount. This is way better if you're trying to buy and hold real estate and maximize your cash flow, how much you get with the least amount of money in, and then get your cash flow quickly because you're not spending a bunch of time and energy renovating something completely. And the risk is much lower when you're not doing that much renovations. You don't have the concern of the risk of renovations. So I'm looking at something like this, perfect. I don't mind cosmetic. If I got to fix some paint, if I got to fix some flooring, fine. I'm looking at rooms like this and saying, where is this located? This looks like the living room, actually. Can these become bedrooms? Maybe it'd be a kind of awkward, but this literally could be 2 bedrooms and a hallway, depending on how wide this is. That's the kind of stuff I'm doing as much as possible. Cool, we got the kitchen, whatever. This looks like someone flipped this house is what this looks like. This is my favorite way to buy properties for co-living. I'm looking for an already renovated property, or at least in good enough condition. Like I said, I don't mind doing minor cosmetic renovations, flooring, paint, whatever, but I'm not trying to change anything massively. And the only structural change I'm doing is I'm adding non-load bearing walls. I'm not removing anything. I'm just adding walls that literally are not going to massively impact the property. It's lower cost, way quicker to do so, and it's easy to turn a property back into its regular condition when it's time to sell it in the future if you choose to do so. I won't get into the weeds of that. I explain it in extreme detail in the co-living community, why I go that route and exactly why I consider it and how this impacts the exit, the cost, the numbers, all that stuff. This is my favorite way to buy properties, without a doubt. This is the best way. And then I don't just buy these typically on market as a traditional property, through traditional financing, through a new loan, like a DSCR loan or whatever. I do it through creative financing, right? That's the next step. But my favorite way to buy co-living deals is buying something that's fairly turnkey, needs minimal cosmetic renovations, and then just add a few doors or walls or closets to turn it from 4 or 5 bedrooms into 7+. The other strategies are major renovations to co-living. So basically, you are taking a property that's typically very distressed, ideally, so that you're buying at a discount, and then you're completely like gutting it and fully renovating it. The advantage there is you have a very new property, right? And in theory, if you bought it right, you bought it at a discount, it might have made it conducive for you to be able to do the BRRRR strategy and pull some, if not all of your money out. However, there's a lot of things that can go wrong. If you don't know what I'm talking about, watch my video from last week where we did the live office hours. And there's just, all I've got to worry about here is minimal renovations. If a $20,000 renovation budget goes 10% over, 20% over, what is that? That's $4,000 over budget. That's not going to kill most people. If you're trying to buy and hold real estate, under $5,000, under $10,000, even under $20,000 being off is not ideal, but it should not kill your entire investing journey. Being 10% off on a $200,000 renovation, that is 20. Being 20% off, or it taking 2-3 more months longer, and you have to finance this thing with hard money or private money, so it's compounding interest. Like, no, like that is how people set themselves up for massive failure because of the enticing reward that's portrayed. But the reality of it is, you're not just doing minimal renovations. There's a lot of risk of the renovations not being right, your approximations for how long it'll take, your approximations for what the property will be worth after, the financing you have to refinance into. You can't even do this creatively because there's no point of putting all this money in on a creative deal because it stays stuck in the deal. This doesn't make any sense for the way that I do it, and I think it's too much risk for the vast majority to do it. If you don't know what I'm talking about, I went an hour and a half in extreme detail last week with a real example with someone literally dealing with this right now, gave him a roadmap that can hopefully help him out of it, but it's a tough situation, quite honestly. Overall, it's a good rental property. It's going to be a good rental for him in the end, but the amount of work, time, effort, risk, and lost money during this period was not worth it when at the same time I could buy 2 to 4 of these very quickly. That's a big part too, is the scalability. Time and effort that goes into here means I could do 2, 3, 4 times as many deals this way. New build co-living is different than a major renovation because instead of taking an existing house, I think the best way to consider it is to go very low price and see if I can find something that's in very bad condition. Yeah, usually you don't see as many of those up here. Let's be less restrictive. And just because it's cheaper doesn't mean that's the case. Like I can go on Investor Lift or other platforms that sell properties cash, or I can type in like investor special or whatever, but I want you to see like what it looks like. This is not handy homeowner. This one's not, it's not terrible at all. It's not turnkey like the other one, but like this would actually be a cosmetic renovation for me. I don't mind upgrading countertops and appliances and little things like that. I just don't want to like, okay, so like the bathroom, would need to be remodeled. A lot of drywall stuff needs to get remodeled. So, okay, there is more renovations here. Like this is closer to that. You may not need to do a full gut rehab, but this is closer to that. Another option that people do for these full gut renovations is they'll take something that's smaller, right? Like it's 1,500, 1,700 square feet, completely reconfigure it for co-living, which then really minimizes their ability to exit the property in the future. So they got to do a full, it's just like an awkward property. Like who's going to want to buy that in the future besides an investor? I'm not a fan. New build is different. New build is a little trendy. It's good if you know what you're doing and you understand the issues with it, which is it's going to take a lot longer and there are risks and there is bad financing for co-living and you have to find the land. You have to do way more work to be able to make one of these things work. And a lot of money gets stuck in the deal because you cannot creatively finance it. So you have more money stuck in the deal to buy the land, like to create the structure. You might be able to get some long-term debt, but you could keep that money in a lot longer. And usually it doesn't make a lot of sense long-term. There's pros to it. Do not get me wrong. There are pros to new builds. I think new build for co-living, creating a 10-bedroom, 10-bath is not necessarily ideal unless you plan on keeping that indefinitely because you have very limited people you can sell it to outside of investors. What I've done for new builds and what we're going to do more of is taking a duplex, building a brand new duplex that's 5-bedroom, 5-bath or 5-bedroom, 3-bath, 2 of them that collectively are 10-bedroom, 3-bath or 10-bedroom, 10-bath, whatever. That is much better because that is much better to sell than trying to sell a 10-bedroom, 10-bath house because there's a very limited buyer pool who would want to buy that. And the best buyers are always homeowners, people who want to live in the house. No one wants your 10-bedroom, 10-bath house. Like it's very limiting in your ability to exit. And when you buy real estate, you should always consider the entry, the acquisition, the cash flow you generate during, the appreciation, all that other stuff, and the exit. Okay. So you got to consider all 3 of those. That's where this one's really limiting. And it takes forever to finally get some money on it. You can also buy someone else's existing co-living. There are a variety of ways to do so. And one of those ways is like Pad Split, the platform I use, also allows you to just buy other people's properties. Or I've sold properties as well that were existing co-living. Like sometimes someone's already done it and they're just selling it typically to another investor. You can buy those, but the downside is typically if someone did all the other work, they've squeezed a lot of the juice out and you're getting lesser returns than if you just did it yourself, if that makes sense. So I'm not gonna go into the pros and cons. That's what the whole training is for, just to give you an example. But this table basically compares them. This is my opinion. These are based on my numbers, my opinions, and all that kind of stuff. The reason why I love turnkey conversions is how quickly, within less than 60 days, we can be cash flow positive if there's minimal renovations to do. It takes us less than 30 days to renovate, less than 2 weeks to furnish, less than 2 weeks to get this thing listed and tenants starting to move in. As opposed to if I'm building something brand new, it could take 18 plus months just to finish the renovations, and the whole time is being financed at higher interest. Same with the full gut renovation. Existing co-living is the fastest, it's immediate, but you've already squeezed a lot of the juice is the downside. The risk level, right, of taking over someone's existing co-living is lower than if you're doing a turnkey conversion. But like I said, the big risk is the renovation. How long will it take you? Like the difference in risk. They all have risk that the income will not meet the expenses and all that stuff, right? But the risk comparison between them is that existing co-living, you already have it. There's no more renovations, no more furnishing, as long as as long as they didn't screw over the property. But with a turnkey conversion, there is risk, right? You're adding walls, you're doing renovations. That's going to take time. It's going to cost money. The risk there is that it could cost more money or take longer. But like I gave you the example of $20,000, $30,000, being 10, 20% off is not the end of the world. Not ideal, but it's not the end of the world versus being hundreds of thousands of dollars of renovations and being 10, 20% off of those. The value add potential, how much you can increase the value of a property. Well, obviously, if you're doing a full gut renovation or building brand new, you're adding a lot of value. The problem is when I've seen people do these and they're raising money, they don't buy the properties at enough of a discount or do the renovations at a low enough cost that the property is actually worth something more than all their money in. Look at the example from last week. Literally, you do all this work and your property is worth no more than what it was before once you account for all your all-in costs. Let me phrase that better. If you added $100,000, if it went from $200,000 to $300,000 value, but it cost you $100,000 to get there and you bought it at $200,000, well, the net equity is nothing. So the value add that you did was negated by the amount of money you had to invest to get it to that point. There is some benefit of adding value to turnkey conversions, right? Like I said, the flooring, like those are the things that add a lot of value, right? The cosmetic stuff, the flooring, the paint, and all that kind of stuff. It's minimal value add, but you're not buying it to add a bunch of value for a rental property. You're doing it because you want to get as much cash flow as you can with the least amount of money invested in the deal. That's the big thing there. Design control, obviously, if you're doing a full renovation or new build, you can control that entirely, what it's going to look like. While you're more limited with turnkey conversions, what you're doing less is trying to redesign the property entirely. You're just choosing from the plethora of deals out there which ones you want to do, which ones are conducive to your management strategy. Obviously, it's existing co-living. It is what it is, right? It's typically they've already extracted or added all the rooms they possibly can. This is one of the biggest ones for me is scalability. Which ones allow me to buy it effectively and have really high returns that allow me to quickly get those returns so that I can do a lot of these deals at one time. I guess in theory, scalability, existing co-living would work here, except for typically the only way to buy existing co-living, unless it's the rare creatively financed sale, is a new DSCR loan. Like you have to take out a new loan, so that makes it less scalable because that process takes longer and is more cumbersome than the creative financing available for just a general turnkey property that you choose instead of to long-term rent. You choose to do co-living, right? You just take whatever the property was, right? You just take whatever the property was. I mean, not this one, but you just take it if it's creative. And instead of renting as long-term, you rent it out as a co-living instead because you convert it for that. In my opinion, turnkey conversions are ideal for people who are serious about scaling. If you're trying to buy 3, 4, 5 plus properties and actually build a portfolio that allows you to be financially free in a reasonable time frame with less risk, turnkey conversions are the way to go. There's less risk of things going wrong. There's so many investment opportunities out there if you know what you're looking for and how to find them. And the conversion is faster. Like I said, it's lower risk, it's faster. So then you're able to get your money quicker and really minimize your downside, right? Minimize the risk of things going really wrong, destroying your journey. existing co-living is the easiest way to get co-living. And that makes a lot of sense for people who want to be more passive or out of state. But the issue there is, instead of getting much higher returns, you're getting much lower returns, and you're typically putting more money in and primarily have to do traditional financing. The reason for that is if someone's selling something that's a good co-living deal, but they're selling it, they're typically doing that to get their money out to use elsewhere. Those people are not selling great properties just for the heck of it, right? They're great co-living investments for the heck of it. They're selling it to get the money out to invest it somewhere else. So either they don't think it's a good investment, which is why they're selling it, or they want to get their money out. So then they're not going to be open to creative unless you give them all their equity up front. Full gut renovations can be great, right? Like I said, I have it in my tool belt. It is one of the ways that I buy deals. It can be great, but it has a lot more risk. And I think it's best for those that have fix and flip experience, a lot of local market knowledge and resources to be able to do this successfully and make it work. I still do not think it is as scalable as a turnkey conversion, because I could do, in the time that I could oversee one of these and the risk involved and all that, I could do multiple turnkey conversions, make more money with less money in total. So then why would I do this? I rarely do this, but the advantage is I get to keep 100% of the ownership if it's done perfectly, right? As opposed to raising money and giving up some of the ownership, because you're going to need money for these, right? And I raise the money for my deals. New builds, I just put long-term developers. It just depends on what your goal is. There's value there. It's just a different type of investor. And once again, long-term developers, I think, are more of the end goal in the experience level, because even an experienced flip is very different than long-term development, because you have permit delays and you have all these other things that you need to account for. So you need even more experience and knowledge than what you would need as a full gut renovator or fix and flipper. Definitely a lot more than just buying a property and adding some non-load bearing walls. There we go. Turnkey conversions hit the sweet spot of cash flow, speed, and scalability. You minimize major rehab risk while still boosting income through additional rooms. The key is knowing how to find and analyze the right properties. Like, that's what you have to get really good at. But that's fundamental for any of these strategies. You have to know what you're looking for and then how to effectively analyze, is the income going to exceed my expenses each and every month? The advantage with a turnkey conversion, especially creatively financed or even a new loan, is you know what that debt is. If you're doing a full gut renovation, you don't know what the new debt payments will be at the end, because you need to take out a new loan at the end. So interest rates can change, the value of the property and how much loan a bank's willing to give you at that point will change. New build, same thing. You have a rough idea, but you don't know that. So that's another variable, not just the renovation, the timeline, all that stuff during that process, but it's also getting the long-term debt is also a big variable. So it makes it even harder, not just to analyze the amount of money in and the risks up front, but also the likelihood of generating enough income to cover whatever the expenses, because it's not clearly defined at that point. Okay, Paul, great question. Of the last 10 properties purchased, how many have been purchased on MLS and how many purchased from wholesale sub 2? Great question, brother. If you know anything about me, you understand leverage is a big part of super investing. Leverage in every aspect, leveraging effective leverage of time, effective leverage of capital, effective leverage of everything. Why I have my systems and processes and team members and the way I acquire deals, all that good stuff. It's a fundamental element for super investing because it allows you to achieve your goals faster with less of your own effort being dedicated on every area. And then you focus your effort on the most important things to grow and scale your business. So with that being said, of the last 10 properties, 9 of 10, and that's almost always the case, is purchased through wholesalers. It's almost always purchased through wholesalers, especially because I'm buying creatively financed deals. So like virtually all the deals that I've bought, cash or creative, of the last 10 have all been creative, and that's by design. It's not the best use of my time to go on the market to find a traditional financed property, right? Like the house that I said, and I could only buy traditionally financed or do all that negotiations and all that. I am more than glad to pay wholesalers and bird dogs for sifting through the dozens, if not hundreds, of potential properties out there for sale, figuring out which ones are open to creative, and then I decide which of those I want to further analyze and buy, right? That's a better use of my time, because other things can be done by other people. But at the end of the day, I have to decide how I'm going to effectively analyze my deals and which deals I decide to buy, right? That's up to me for my business. You can't put that in someone else's hands. If you do, you're literally putting one of the two most important parts of your entire real estate business and the success of it in someone else's hands who's not you, right? There's a lot of things you can outsource. That's not one of the things you should outsource, is which deal should you buy, right? That is your responsibility as a real estate investor. If you don't want to do that, you probably shouldn't invest in real estate. Like, or you better be paying someone who has a lot of great skills to do that for you. And that's an avenue a lot of people do.